Imagine finding out how one of the world's greatest investors benefited from Nvidia without directly owning it, and how you might be doing the same without even knowing it. Intrigued? Stick around to discover the fascinating details and learn how you can leverage similar strategies for your own portfolio. So before we start, if you find value in this video, please support our channel by liking and subscribing to our weekly updates. Now, let's get started. Have you ever kicked yourself for not buying Nvidia stock? You might be surprised to learn that you could still have reaped the benefits of its incredible performance, much like the legendary investor Warren Buffett. While Buffett and tech stocks typically aren't the best of friends, there are indirect ways he has profited from Nvidia's success without owning a single share. Warren Buffett, the Oracle of Omaha, is known for his cautious approach towards tech stocks, largely avoiding them due to their complex nature. Nvidia, ticker NVDA, a leading player in artificial intelligence, AI, and graphics processing units (GPUs), has seen tremendous growth over the past few years. Despite Nvidia's impressive track record, Buffett hasn't directly invested in this stock. But does that mean he missed out entirely on Nvidia's meteoric rise? Not exactly. Buffett has strategically benefited from Nvidia's gains through indirect investments. Berkshire Hathaway, the multinational conglomerate led by Buffett, holds significant positions in two prominent exchange-traded funds, ETFs, that include Nvidia among their holdings. These are the SPDR S&P 500 ETF Trust, SPY, and the Vanguard S&P 500 ETF, VOO. Both of these ETFs track the performance of the S&P 500 index, which Nvidia has been a part of since 2001, after replacing the troubled energy giant Enron. In late 2019, Berkshire Hathaway initiated positions in these two S&P 500 ETFs, acquiring 39,400 shares of the SPDR ETF and 43,000 shares of the Vanguard ETF. These holdings, while relatively small in the context of Berkshire's massive portfolio, have still allowed Buffett to benefit from Nvidia's stock performance indirectly. It's important to note that Nvidia represents a relatively small portion of the S&P 500 index, weighted by market capitalization. As of now, Nvidia makes up about 7.25% of the S&P 500. When Berkshire first bought these ETFs, Nvidia's weight was even smaller, meaning the direct financial impact from Nvidia on Berkshire's ETF positions has been modest. Additionally, New England Asset Management, NIAM, a wholly owned subsidiary of Berkshire, also holds minor positions in these ETFs, further amplifying Buffett's indirect exposure to Nvidia. But the story doesn't end there. Buffett has also indirectly benefited from Nvidia's rise through his substantial investments in major cloud service providers, all of which are significant customers of Nvidia. Let's explore this connection further. Amazon, ticker AMZN, Microsoft, ticker MSFT, and Alphabet, ticker Google, the parent company of Google, have all seen their stock prices soar in recent years. Driven in part by the booming demand for cloud services and AI capabilities, Amazon Web Services, AWS, Microsoft Azure, and Google Cloud are leading players in the cloud services market, and they rely heavily on Nvidia's advanced AI chips to power their platforms. Amazon stock surged by 81% last year, and has continued its upward trend with over 20% gains year to date. Microsoft experienced a 57% rise in 2023 and is up nearly 20% this year. Alphabet has also enjoyed significant gains, with its stock jumping 58% last year and over 25% so far in 2024. The adoption of generative AI and the overall AI boom have been key drivers behind these impressive performances, and Nvidia's cutting-edge technology has played a critical role in enabling these advancements. As a major investor in Amazon with 10 million shares and positions in Alphabet and Microsoft through NIM, Buffett has indirectly profited from Nvidia's success. Additionally, all three of these tech giants are significant holdings in the S&P 500 ETFs owned by Berkshire, further intertwining Buffett's portfolio with Nvidia's growth trajectory. Now let's bring this back to you. Even if you don't directly own Nvidia stock, you might still be benefiting from its impressive run through your investments in ETFs or mutual funds. The SPDR S&P 500 ETF Trust is the largest ETF in terms of assets under management, while the Vanguard S&P 500 ETF ranks third. If you hold either of these ETFs or similar funds, you likely have indirect exposure to Nvidia. Moreover, Amazon, Alphabet, and Microsoft are commonly found in many investment portfolios. Whether you own these stocks directly or through funds that include them, you are reaping some of the rewards from Nvidia's technological advancements and market leadership. Owning ETFs that track the S&P 500 index offers a significant advantage. As companies like Nvidia grow and their market caps increase, their weight in the index also rises. This means that even if you missed out on buying Nvidia shares early on, your investment in S&P 500 index funds would still capture some of Nvidia's gains as it becomes a bigger player in the market. But why is Nvidia so important in the tech world? Nvidia's GPUs have revolutionized various industries beyond gaming. They are critical in fields like artificial intelligence, data centers, and autonomous vehicles. Nvidia's AI technology is at the forefront of many innovations, making their products indispensable to tech giants like Amazon, Microsoft, and Alphabet. These companies use Nvidia's GPUs to enhance their AI capabilities, which in turn drives their stock performance and, by extension, the value of the ETFs and mutual funds that include them. Nvidia's advancements in AI are particularly noteworthy. Their GPUs are designed to handle complex computations at incredible speeds, making them ideal for AI applications. This has made Nvidia a key player in the AI boom, providing the hardware necessary for everything from data processing to training machine learning models. As AI continues to grow in importance across various sectors, Nvidia's influence and market value are likely to increase even further. Furthermore, Nvidia's recent ventures into the autonomous vehicle industry have shown promising potential. Their Drive platform, an AI-based solution for autonomous vehicles, is being adopted by numerous automakers to develop self-driving cars. This not only diversifies Nvidia's revenue streams, but also positions the company as a critical player in the future of transportation. But before we proceed, here's a question for you. What's the most surprising way you've benefited from a stock you didn't own directly? Share your stories in the comments. Now let's talk about the pros and cons of investing in Nvidia. On the plus side, Nvidia is a market leader in GPU technology and AI, with a strong track record of innovation. This leadership positions them perfectly to capitalize on the growing AI and autonomous vehicle markets. Additionally, Nvidia's technology is used in a wide range of industries, from gaming to data centers to automotive, providing multiple revenue streams and reducing dependency on any single market. However, there are some downsides to consider. Nvidia's stock is often viewed as expensive, which can be a barrier for some investors. Plus, being a tech stock, Nvidia is subject to market volatility, leading to significant price swings. Lastly, the tech industry is fiercely competitive, with Nvidia constantly facing challenges from other companies developing similar technologies. Investing in Nvidia directly might seem daunting given its high stock price, but through ETFs and mutual funds, investors can still gain exposure to its growth. These funds provide a balanced approach, mitigating risks associated with investing in a single stock while capturing the benefits of Nvidia's market performance. In summary, while not owning Nvidia stock directly might seem like a missed opportunity, both Warren Buffett's strategy and the broader market dynamics show that there are still ways to benefit from the success of this tech giant. Investing in diversified ETFs and holding shares of major tech companies that leverage Nvidia's technology can provide exposure to its growth without the need to pick individual stocks. Warren Buffett's investment strategy has allowed him to indirectly benefit from Nvidia's tremendous growth without directly owning Nvidia stock. By investing in S&P 500 ETFs like Spider S&P 500 ETF Trust, SPY, and Vanguard S&P 500 ETF, VOO, as well as holding significant positions in Amazon, Microsoft, and Alphabet, Buffett has capitalized on Nvidia's success. These ETFs and tech giants, which heavily rely on Nvidia's advanced AI and GPU technology for their cloud services and AI capabilities, have seen significant stock performance gains. Nvidia's GPUs are integral to the operations of Amazon's AWS, Microsoft's Azure, and Google Cloud, driving their growth in the AI and cloud markets. This symbiotic relationship enhances the value of Nvidia, which in turn benefits the ETFs and the stocks of these tech giants. Amazon, Microsoft, and Alphabet, each with a substantial market cap, have all experienced impressive year-to-date gains, partly due to their reliance on Nvidia's technology. Berkshire Hathaway's exposure through these ETFs and direct investments in these tech giants showcases a strategic approach to leveraging Nvidia's market dominance indirectly. This method provides a diversified investment that captures the benefits of Nvidia's technological advancements and market leadership, while mitigating the risks associated with holding individual stocks. The comprehensive investment in ETFs and leading tech companies underscores how investors can still gain from Nvidia's innovations and market growth without direct ownership, illustrating the effectiveness of diversified portfolio strategies in the rapidly evolving AI and tech landscape. As we wrap up, Remember that successful investing often involves a mix of direct and indirect strategies, leveraging the growth of industry leaders like Nvidia through a diversified portfolio. If you found this video helpful, please like and subscribe to Simple Investing Secrets for more insights and updates on the stock market and financial tools to help you grow your net worth. But before we go, I'm curious, which tech stock do you think will be the next big winner like Nvidia? Let me know your thoughts in the comments. And always remember, this video is for informational purposes only and is not financial advice. Thanks for watching, and we'll see you in the next video.